Look into the next one. Question number 100. Last question. Flochem, Palanpur, Gujarat has entered into contract with our refinery, Abu Road, Rajasthan on 1st July to supply 10 valves on FOR basis. I like this question because this question is combining valuation as well as input tax credit. First, we need to do the valuation and determine what is the sale value. While doing the valuation, so whatever input tax credit that we have, so should not be added to the cost, and then add the profit margin, arrive at the sale value. On that sale value, we need to pay GST. Minus input tax credit paid on purchase will be reduced. Net liability. So this is a question, so special kind, which is not tested in exam so far. So they can ask. So there are inward supply. While analyzing inward supply itself, we need to know what is whether ITC available or not. If ITC available, that GST component you take out as ITC and remaining thing you need to add to the cost. If ITC not available, so then you add the GST paid component to the cost itself. So now we need to arrive at the cost. And once you arrive at the cost, add profit margin. So then you will be getting the value. And on the GST payable minus input tax credit like that. Okay. So see this. Flochem Palanpur has entered into contract with our refinery Abu Road on 1st July to supply 10 valves on free on road basis. The following information is provided in this regard. List price per valve is 1 lakh exclusive of taxes. One of the conditions of the contract is that Flochem should ensure a 2-stage third-party inspection for the valves during the manufacturing process, and the cost of inspection is 15,000 for 10 valves is directly paid by our refinery to testing agency. So here Flochem has entered into contract with our refinery Abu Road on 1st July to supply 10 valves. So supplier is Flochem and recipient is our refinery. So now this particular 15,000 should be included in the value or not. Any amount that the supplier is liable to pay but which is paid by the recipient should be included in the value as per section 15 subsection 2 clause B. So in this case, that 15,000 rupees to be included, first of all, is it the liability of the supplier? Yes. One of the conditions of the contract is that Flochem should ensure a 2-stage third-party inspection. So which means that, so it is any amount that the supplier is liable to pay but which is paid by the recipient. So that should be included in the value. Therefore, this 15,000 rupees should be included in the value. So then, our refinery requires a special packing for the valves. Cost of special packing is 10,000. That should also be included in the value. Any incidental expenses charged by the supplier to the recipient before delivery of the goods or any time. So, other expenses charged by the supplier to the recipient before delivery of the goods should be included in the value. So, therefore, this 10,000 also should be included in the value. Flochem arranges for erection and testing of the valve supplied by it or our refinery site. Cost of erection is 15,000. So this 15,000, the cost of erection, Flochem arranges for erection and testing of the valve supplied by it to our refinery. So this is actually after delivery, and if it is as a condition of sale of goods, then it should be included in the value. Goods are dispatched with tax invoice on 20th July and they reach their destination at Abu Road on 21st July. Lorry freight of 5,000 has been paid by our refinery directly to the lorry driver. Should that 5,000 be included? What is the type of contract? Type of contract is FOR basis. FOR basis means their job is not to transport and deliver. So, their job is to transport. It is not on ex-factory basis, correct? It is not on ex-factory basis, free on road basis. So then they need to deliver at that place. So again, supplier liability is incurred by the recipient. So you can see the answer here. First, list of 10 valves. 1 lakh into 10. So that will be 10 lakhs. Amount paid by our refinery to testing agency. Any amount that the supplier is liable to pay which is incurred by the recipient should be included in the value. Special packing, no doubt it should be included. erection and testing at site. So if you see, we need to check whether it is as per the contract or not. So entered into contract and it is FOR basis means when it is delivered to the site. So till that time, so including that, installation or testing, everything is before delivery. So therefore that should be included in the value. Then next one, erection and testing at site and freight also to be included. So why freight to be included? Again same, any amount that the supplier is liable to pay, but which is paid by the recipient. Okay. So this, repeat, which one you want me to repeat, Pa? So total value of taxable supply 10,45,000. So IGST at the rate of 18%, 1,88,100. So these are all the points. So we arrived at the value. Now, thereafter assume CGST, SGST. So therefore we need to arrive at the GST payable. Now this is the cross liability. Thereafter they have given some inward supplies. Avail services of works contractor to erect foundation for fixing machinery to earth in the factory. Generally, works contract service is block credit. But when it is incurred for plant and machinery, so then ITC available. Laid pipelines laid outside the factory, and telecommunication towers are not paid as plant and machinery, so GST paid cannot be taken as ITC. Then for the purpose of smooth and convenient mobile communication in factory, it has installed telecommunication tower. No. So because plant and machinery excludes telecommunication towers and pipelines laid outside the factory gate here. Okay. Then it has entered into agreement with a travel company to provide home travel facility to its employees when they are on leave. So in this case, can they take ITC? No. Leave travel facility, that is the employees on vacation, ITC not available. It has entered into an agreement with the fitness center to provide wellness services to its employees after office hours. No. Membership of a club, health and fitness center, ITC not available. Suppose if it is under statutory obligation, ITC available. So only one credit, that is 5,000, 5,000. Okay. So this and any other ITC already opening balance is there. CGST 20, SGST 20, so 25,000, 25,000. So that will be adjusted. The net liability will be 1,38,100. Okay. So therefore, so this is the note that we need to write for this purpose. So with this, we completed all the questions related to input tax credit.